Thank you so much, everyone. Let me start now. Good afternoon, ladies and gentlemen. Thank you for participating in the VRIGHT Exchange Union Budget 2026 Investor Conclave. At VRIGHT Exchange, we believe that budgets should not be analyzed only through announcements, but interpreted through intent, execution, signals, and long term capital implications. Today's discussion is designed to move beyond headlines and examine what Union Budget 2026 truly means for investors, businesses, and India's growth trajectory. Budget 2026 reflects a policy mature approach, balancing fiscal discipline with sustained capital expenditure, strengthening institutional credibility, and creating visibility for long term investors. The focus has clearly shifted from short term stimulus to multi year capital formation and execution certainty. Our objective today is to decode structural policy signals, capital allocation trends, sectoral opportunities and risks, and how investors should position themselves over the next 12 to 36 months. We are privileged to have a distinguished panel representing policy, economic, economics, capital markets, institutional investing, and real economy execution. I welcome Dr. Sunder Ram Korivi. He is founding Dean of National Institute of Securities Markets, that is NISM, and also former SEBI SSIR chair professor. And the theme that he's going to be talking about is policy, regulation, and market structure. So, Dr. Corby, we would like to begin with a structural policy and regulatory lens, which is foundational for investor confidence. So, the key focus areas are for your analysis is to structural policy signals from Union Budget 2026, fiscal discipline, institutional credibility, and investor confidence. Third is regulatory alignment with capital market growth. So I have three questions for you. What are the most important structural policy signals in Budget 2026? And how does fiscal discipline influence market confidence and capital flows? Third question is, are there regulatory or institutional changes investors should track over the next 12 to 24 months? Yes, sir. Please
Thank
go ahead.
you. Thank you, Mr. Aryan Rana, for inviting me and for your questions. And as rightly introduced by you, we are not looking at this budget from a transactional point of view, which is stock market or tax related. We are looking at it from a structural point of view so that we align our business and our activities better. So the answer to your first question is that when this budget was in the making, the mold was already cast. On the one hand, you have the Niti Aayog, which is the think tank of the government, and the 10-year vision flows from the Niti Aayog. And this is taken up as an input by the finance minister, and it is probably converted into 10 one-year budgets. So slices of the Niti Aayog, which is the grand vision, the blueprint for the economy, will be seen in the budget. So to that extent, the budget is fairly predictable, not just this year, but every year. That means the main sculpture comes from there. So there was an interesting article by Mr. Amitabh Kant, former chairperson of the Niti Aayog, and he said that 5 reforms are necessary for taking India ahead towards Viksit Bharat. The one is reforming the municipalities and making cities the engines of growth, because by 2050, about 50% of the population will be urban, and the global average is 75%. And then later on, we will be moving towards 75% urban. Okay, so urban reforms are much necessary, and they become the engines of growth. Right now, they are the third tier of the government. You have central government, state government, and municipal. So municipal infrastructure financing, and making cities the engines of growth is one aspect. The second aspect is to continue our quest towards developing depth in manufacturing. The third aspect is to help Indian companies to reduce their cost of capital. Our cost of capital is 400 basis points more than what it is for the other economies. Next one is education and innovation. And last is reduce trade barriers. So you saw a lot of focus this time on the customs. Okay, you generally have income tax, GST, and the third angle is customs. So this time the angle was on customs. So we have come on the back of about eight foreign trade agreements, free trade agreements, and we had the big one yesterday, which is after the budget. So for the first time after several decades, when India became insular and inward-looking, if you remember the way our Companies Act is written, the way our economic legislations were written, it was written with the template of the socialistic pattern of society. And entrepreneurship and industry was shunned. If all of old timers remember, in 1969 we had nationalization of banks and we had the MRTP, and all those in that era, entrepreneurship took a back seat. And then in the 1990s, we leapfrogged into information technology and a service oriented sector. So manufacturing was given the go by. That is now being put back in the rails. So that is the answer to your first question, that the 5 points issued raised by the Niti Aayog chairperson: municipal reforms, manufacturing depth, reducing cost of capital, education and innovation, and reducing trade barriers. I think apart from reduction of cost of capital, the other four boxes have been ticked in this budget. So that's what I mean, that the mold is cast. The other aspect which I would like to highlight is that the position of the state governments, the fiscal deficits of the state governments is running out of hand, it is running out of control. And if you look at the total fiscal deficit of the center, including the states, it is not a happy picture. Now, linking this up to the second question is the fact that negotiations have been on between the finance ministry and various agencies such as World Bank, IMF, Asian Development Bank, and other multilateral agencies. Talks are also going on with the sovereign rating agencies such as Moody's, Standard and Poor, and Fitch. Okay, we have to demonstrate discipline, and we have demonstrated it, and we will continue to demonstrate it, which goes by the fact that the fiscal deficit has been estimated at 4.3%. We achieved 4.4% in the current year. And the ratio which is currently in vogue is debt to GDP, which we have maintained at 56%. It is likely to go down to 55%, and the glide path is to reduce it to 50% by 2030. So we have to demonstrate that we are maintaining the fiscal discipline. Okay. And therefore, this was another aspect where the mold was cast. Okay. So Niti Aayog gave the grand vision with 5 pillars, and the mold was cast. So if the government is negotiating with Moody's and Standard and Poor for a rating upgrade, that you would not like to upset the apple cart by going for fiscal indiscipline in this year. So this is how the fiscal discipline has been maintained. And although the gross borrowing is likely to be 17 lakh crore, if the quality of the expenditure is productive, it will be 17 lakh crore, but it will be a lower percentage of the GDP because the GDP is set to rise. We've got an endorsement of our GDP growth figures from IMF and World Bank as well as the sovereign rating agencies. And last but not the least, as far as regulatory reforms are concerned, two major financial sector regulators are SEBI and RBI. On the SEBI side, we have got a FSLRC, Financial Sector Legislative Reforms Commission, headed by BN Sri Krishna, which submitted its report in 2013. Elements of those have already been incorporated into into actuality. with the Forward Markets Commission merging into SEBI, and you have a Companies Act 2013, which replaced the archaic 1956 Companies Act. You also have an Insolvency and Bankruptcy Code of 2016. So therefore, what is left? You have an SCRA of 19 Securities Contract Regulation Act of 1956 vintage. You have the SEBI Act of 1992, and you have the Depositories Act of 1996. So these three were remaining to be reformed, and therefore that has been taken up in the Securities Market Code Bill, which 2025, which is likely to be passed in this parliamentary session, this budget session. The Securities Markets Code will be to modernize the code and harmonize it with the Companies Act and the IBC and new capital market practices. One of the important points which not many people are talking about is the consolidation and banking. See, we all know about banking from the days of Shakespeare's Merchant of Venice. Okay, probably the oldest bank in the world was an Italian bank called Bank of Siena. Okay, fractional reserve banking took off in Sweden later on, and a lot of banking which we follow today, 1934 Banking Regulation Act, it's a British 1934 RBI Act, it's a British era act. 1949 we have the Banking Regulation Act. Okay, time to overhaul it with modern practices. Banking is changing a lot. Very short time to discuss everything. So the government has appointed a committee to revamp banking consolidation. Okay, today you have several types of banks. The definition of money itself has undergone change. Okay, plastic money, electronic money, central bank, digital currency, and whatnot. We've already seen deposits being depleted. Okay, and bankers have to change their act. So it's a good thing that on a consolidated basis, a banking committee, high-level committee has been appointed. Okay, and along with the change in the times, we are also seeing that to support banking, there are other specialist institutions being incorporated in the last few budgets. For example, you have India Infrastructure Finance Corporation, then you have NABFID, National Bank for Infrastructure Development. We have a Sagarmala Finance Corporation to take care of maritime sea ocean development. So these are the new institutions. And last but not the least, I would like to say about the reforms for MSME also. A number of schemes for MSMEs financing and market development have taken place over a period of time. These schemes are being revamped and consolidated. Last but not the least, if you ask me one opportunity missed, the opportunity would be missed is streamlining the taxes in terms of tax deduction at source. Now, in capital market transactions, every basis point is important. So, if you have tax deduction at source in the bond market, it sort of muddies the waters insofar as the yields are concerned. In equities, there is a margin for profit, but in bonds, prices move in a narrow band. If you have tax deduction at source, this is one area where India's inclusion in the global bond indices has been held back because no other jurisdiction has tax deduction at source. I think you don't need it now in these days when the audit trail is so good. And you also have the cess. I thought cess is a mess, but I thought right now there are fiscal compulsions for the government to retain the cess. Okay, so once the cess goes and you have a sleeker tax regime, bereft of TDS, then we'll be moving like a well-oiled machine. Then the difference between the intention of policy and the execution and outcome of policy will be much better. I stop here and I will take further questions as the discussion takes place. Thank you.
Thank you, Mr. Dr. Sunder Ram Korivi. You have very nicely summed up the budget, and this, your views reinforce that institutional credibility, not policy surprises, is a real investor signal, and consistency seems to be the quite the strength of this budget. Thank you so much, Dr. Corby. And we will have another question, but that I'll come back to you later on. Now, I invite our next guest speaker, and so I welcome Mr. Harvansh Chawla ji, eminent lawyer and also chairman BRICS Chamber of Commerce and Industry. Sir, welcome. And so your theme is global trade, investment, and India's positioning. Ms. Chawla, from domestic policy, we now move to India's positioning in global capital and trade flows. So your speech will focus, or your analysis will focus on three key areas, and that are India's role in global capital and trade post budget. Second is infrastructure, logistics, and export competitiveness. Third would be policy continuity and international investor perception. So I would have again three questions for you, which you can, of course, elaborate in 5 to 7 minutes. First is, how does Budget 2026 position India in the global investment landscape? Second question is, what signals does this budget send to foreign and cross-border investors? And third question is, which sector could benefit most from global supply chain realignments? Ms. Chawla, over to you. Is
No,
God?
no, no. I'm clear now. I was on mute and I couldn't.
Okay, okay. I'm so sorry,
Okay.
sir.
I couldn't find the mute button. Sorry.
All right, all right, all
Okay.
right.
No, I
Please
was
go ahead.
just saying Professor Sundar has actually summed up everything so beautifully. I don't think much is left for all of us to say over here. I must say you are very well prepared and very well read, sir. Congratulations and great and honor to be with you on this dais, sir. Now, coming to the issue of the first question which you Aaron put was, what is the global positioning? My view is this actually positioning started about 5, 7 years ago. It is not something which is happening today. In fact, what has happened in this budget that the government has put aside some capital to give it a thrust, whether it is the green capital, our the semiconductors, or it is carbon credit, or it is the infrastructure, for instance, the nuclear power plant, and so on. All these things started many years ago, but now the government has put the capital aside to give it a thrust. That's what is the difference I see. And this was much required because, for the purposes of global positioning, you need to show to the world, and especially to the rating companies, how your country is rated. The country is rated primarily on the basis of the infrastructure and the policies and the rules and regulations of a country. Of course, the economic, the question of the valuation of your currency and all follows, but primarily it is on the development. And therefore, I would say, as Professor Sundar very rightly said, what we had to do for the purposes of negotiation with the rating agencies, this was the need of the hour, and our honorable Prime Minister has very smartly and cleverly got it incorporated in the budget, which will lead India to a next level in the global positioning. I can't hear you, Aryan. Can't hear you.
Can't hear me. All right, sir. So you
Yeah.
summed up very nicely this thing. So बजट जो है एक एक्सरे की तरह होता है इसमें भावनाएं नहीं दिखती और नीति की हड्डियां दिखती हैं. So
Mhm.
very nicely said, Ms. Chawla. So now my next question to you is, so, what is it that the investor should look for in the next, let's 18 to 24 months? Global investor, do they need to follow a particular strategy or particular this thing? If you can just elaborate on that. I'm talking about global investing and how should they look at India. Uh,
You see, from the point of global investors, since I represent a lot of big multinationals in country, what I've seen is their continuous question is the political stability and the consistency in the opening up of the market, rules and regulations, and the laws. They do not want any fluctuation or inconsistency in the laws and so on. So therefore, as long as we are able to say that we have a good governance and we have political stability, I think that will ensure that more investment comes into the country. and we become the favored nation.
All right, sir. So, another question related to this would be, if you could just, which sector should see the fastest and global re-rating post this budget? If you could, you know,
I would say the carbon credit.
carbon credit. All right, sir.
Yeah,
So,
because I'll say why about this, because this is something which is already there in India. It
mhm,
just needs to be tapped. And second will be the semiconductors, but that requires huge capital. It's a very capital intensive market. So and even after that, whether we'll be able to compete with countries like Vietnam and so on for the purposes of costing,
mhm.
that only time will tell. So the fastest and the easiest, or I can say the most hanging fruit, is carbon credit.
All right, sir. Thank you so much. That's like India's.
I'll have to leave in some time because I've got a court hearing immediately after this.
All right, sir. All right. Thank you so much, Mr. Chawla, for being here with us. And it
Thank
was
you.
wonderful to hear you. India's opportunity appears to be moving from growth potential to global reliability. All right.
Thank you, everyone, and look forward to catching up soon with you. Bye.
All right, sir. Thank you. Thank you. Yeah. So moving on to the next guest speaker, Mr. Ajay Thakur. Mr. Ajay Thakur, welcome, very warm welcome to you, sir. He is the managing partner and CEO of TGI SME Capital and former PAC official. His theme for today's discussion is capital markets, SMEs, and fundraising ecosystem. So, Mr. Thakur, capital formation is where policy intent meets market execution. Your focus areas for the discussion today is SME capital formation and fundraising ecosystem is one. Second is market access and investor participation, and third would be infrastructure-led demand and SME growth. And I have three questions related to these uh, points that I made. Are how does budget 2026 influences SME funding and capital formation? That is one. Second is what should mid-sized companies and entrepreneurs focus on post-budget? You know, and third point would be our question: are market structures evolving to better support growth stage companies? Yeah, Mr. Thakur, over to you, sir.
Thank you, Aryan. It's a pleasure to be here on this platform along with Professor Sunder, Mr. Reddy, Mr. Arun. I was hearing Mr. Professor Sunder. It was really great hearing him. Uh, as far as India is concerned, SME has been always the focus because it provides a lot of employment in the country. It's the biggest manufacturing sector as well as it contributes a lot to the exports. But if you see the budget this time, okay, there has been a lot of focus. In fact, second or third item itself was on the SME by the finance minister, whereby she said that MSMEs are the backbone of Indian economy and their progress is paramount for the country. So of course he had proposed 10,000 crore rupees for the for equity participation toward SME, small and medium enterprises. That was the one measure that she has taken, and of course it is going to create capital formation in the country. Second measure that she has taken was the allocation or additional deployment of around 2,000 crore fund to the self-reliant fund, because already existing fund is of 50,000 crore rupees, and they are adding another 2,000 crore funds. So that is the second measure. Third measure, and which I think is was very much demanded by the SMEs, because SMEs have been always fighting with the issue of working capital, because the payment cycle most of the times cross 3 months or 4 months, even sometimes they get in 6 months. So she has mandated all the central public sector enterprises to route their transaction to discount the invoices through the trade platform. That is a very welcome step taken by her. And the fourth is connecting the GEM portal to the trades platform. I think it will provide a lot of information to the small medium enterprises, and I think a lot of the businesses which are allocated for the small medium enterprises, they will be able to take benefit out of that. So I think these are the four measures that finance minister has taken, and I'm quite sure that it will help the small and medium enterprises in expanding their businesses, also accessing the liquidity from the system. Another thing is that the government has been always focusing a lot on the infrastructure, and many of the small medium enterprises are also active in the infrastructure sector. They are providing either equipments, or sometimes they do the contract job. So there also, I think they will get a lot of business because of a lot of push on infrastructure. So overall, if you ask me, that there has been a lot from the budget for the small and medium enterprises as usual. From the equity market perspective, of course, she has not touched the capital market from the longer term perspective. She wants the investor to be less speculative and more investing. So she has not picked either long-term capital gain tax and the short-term capital gain tax. Of course, STT on derivatives have been increased. And I think that was to curb, because the revenue secretary said that we were getting the complaint that a lot of retail investors are losing money because of the speculative trades on options, and therefore to curb that we have done this. So overall, from the equity market perspective, I don't think that anything has been done which is negative for the market, except increasing the STT transaction terms, which is again for the speculative traders. So overall, I think that the budget is progressive from the SME perspective, and even from the investors' perspective, who is looking the capital market from longer term. I will give a lot of credit to the regulators, especially the capital market regulator SEBI, who has, created a balanced approach. Their job is twofold. One is to regulate the market and also ensure that there is a sustainable growth of the capital market. And because of these measures, the measures that they have taken, we have seen, post-COVID, almost, another 11, 12 crore of investors entered into the market. The AUM of the mutual fund has grown substantially. I think it is more than 95 lakh crores. We are getting through SIP almost 30,000 crore per month, which is also negating the outflow of FI funds from the country. We have seen highest number of IPO coming in the last year, almost 1.76 trillion rupees of IPO had come. And in case of SME, almost, I think, more than 260 SMEs got listed, and they have raised almost 26,000 crores from the capital market. So I think the capital market is doing great for the small medium enterprises. Yes, of course, there are a few black sheeps are there. I think the regulators are taking actions against them. But I think the capital market in India today, thanks to the regulators, that is very well regulated and investor friendly market. Uh, and I think, there are other things also. Yes, some tax has been put, for example, on sovereign gold bonds. If you are trading through the capital market, it will be taxed. So their tax burden is going to increase. So one need to be careful before trading, and they should know what are the tax rules. But I think overall, as far as the budget is concerned, SME is concerned, as far as the capital formation is concerned, I think it's a very balanced budget. And you were asking, you have another question also, no? You have asked third question also.
Yeah, so yes, sir. So third question was, are market structure evolving to better support growth stage
Yeah,
companies?
of
So
course, that's okay. So already taken care of. I have already replied that the market. That's what I am saying it today because of the one thing we must need to understand. Post 2020, all the investors who have come into the capital market, they have only seen the bull market. I think
absolutely,
India has first time seen a such a bull market which has remained for almost 4 to 5 years, where the money got double or triple. They have never seen bad market. And everybody must understand the bull and bear market are part and parcel of the capital market. They are not detached from each other. They are inclusive to each other. Unfortunately, they are practice of putting only a bull in front of the exchanges or everywhere people are talking about the bull. I think bull and bear both should be put in the market so that people mind should be balanced and they should understand that every bull market is being followed by the bear market and every bear market is followed by the bull market. So it is not something that people should afraid of. But what has happened in last 4 5 years? A lot of young guys, especially in the age of 20 to 30, have entered into the capital market who don't have patience. They have just seen how to make money, how the market is going up, and even their parents thought that their kids are smart enough to make money out of the capital market. So making money is never an easy task. I think investors need to be patient. They don't be get trapped into FOMO type of situation.
absolutely, sir.
They
So
target
related
on
to this,
research and do proper research and then only enter into the market. I think then the market is of course going to give very good return. We have a lot of good companies and they should invest with patience and at the right point of time.
all right, sir. Thank you so much for your analysis. We'll come back to you with one more question later on. Now, moving to our next speaker, Dr. Vikas Gupta. Welcome to you, sir. And he is the CEO and Chief Investment Strategist at Omniscience Capital. So your theme today is asset allocation and investment strategy, which is very important for the investor's perspective. And so, Dr. Gupta, we now turn to the institutional investor perspective. So we have three key areas or key focus areas for you to tell us is sectoral winners and sectoral themes. One. Second is capital allocation trends post budget. And third would be risk assessment and medium term strategy. So I have three questions for you again, which is which sector emerges as structural beneficiaries of budget 2026? Second question would be how should investors differentiate short term noise from long term signals? And third question is what key risks should investors monitor over the next 12 months, 12 to 24 months? Dr. Gupta, over to you, sir.
Thank you, Aryan. Pleasure to be here. So, first thing, picking up from the earlier speakers and Professor Sundaram as well, that we should not look at this year's budget as a focus slice. Rather, we should look at it as a evolution over a long period of time, right? In terms of the strategic movement. So, if you look at that, uh, think about it that typically 2035 most people will agree that somewhere around $10 trillion is the Indian economy. Okay, that is the target, out of which around 6 trillion would be services, and target is to have more than 3 trillion of manufacturing. Okay, and the remaining would be agriculture, etc. So services and manufacturing become the two major components where huge growth has to happen over the next 10 years. And the whole focus of government has been to create uh, an ecosystem where this happens. Okay, so far the focus was, like, if you go back 10 years back to 2016 onwards, the idea was to make a cashless economy, to have a 5G 4G telecom kind of a basic infrastructure, so that you could build a national digital infrastructure on which naturally then the UPI came, and a national market was created and an Aadhaar based system of identifying. So the digital infrastructure was the first layer. Then a national market was created by GST reforms. So theoretically, the national market was available. Then ONDC, which is still lesser known, but ONDC is in place to create a digital marketplace where people can trade. Flipkart and Amazon like platforms are already there. Bank accounts were already there, Jandan accounts. So all this is creating a digital infrastructure. Next was the physical infrastructure. So this is where, which is ongoing. Last 5 years from 2020 onwards, you have been seeing huge focus on capital investment in infrastructure. And by infrastructure, primarily roads, railways, right, power. These are waterways, etc. We saw the focus in this budget. But so all of these infrastructure things were being put in place, and we saw evolution of that even this year, with 7 high-speed railway routes being announced. Earlier there was the eastern dedicated freight corridor and western dedicated freight corridor, which is nearly complete now. This time we announced east-west freight corridor in this budget, right? So you can see very clearly the evolution, how it's happening, and significant, very, very large amounts of capital were put in. Like if you go back 10 years, the total capex, including grants in aid, was about 2.5 lakh crores. Today it's around 17 lakh crores we are talking about this budget. Okay, so that's extremely large. That's something like 180 to 190 billion dollars every year. So if you take a 5-year thing, it's nearly slightly less than $1 trillion. Okay, 0.9 or by the end of, and every year it will increase. So, and this is such large amount of capital investment while having extremely consolidated on a fiscal basis. So while maintaining the debt to GDP ratios, while maintaining all the capital ratios, so that we also get ratings upgraded, etc. So infrastructure is the next layer, which is, we are in the middle of that phase. So digital was done, physical infrastructure is now getting in place. And then the next step is where entrepreneurs have to step in and create opportunities, okay, which is what Mr. Ajay Thakur just mentioned about SMEs and MSMEs, etc. So entrepreneurial efforts. There is huge amount being put into manufacturing. So to get to the 3 trillion plus and 6 trillion or so in services and manufacturing, lot of things have to be put in place. These are also large job creators, okay, and all of these large numbers become easier when you have lot of trade. And so the number of trade deals, as you can see, but the most important being the US and EU. Okay, US, the details are yet to come, but you can decipher a few things from the tweet as well as from the budget. You put 2 and 2 together, you can understand. Okay, so even though the tweet doesn't mention, you see a number of things in the rare earth metals, rare earth minerals in this budget, right? So there is development of the whole mining of rare earths in the southern states, and then there is a waterway along the eastern states for supporting the rare earth mining and so on. And there will be a lot of imports or technology transfer or joint ventures or FDI related to rare earth processing. And it's very clear that the world wants to move away from dependency, extreme dependency on China for that. And that would be part of the, whether it's explicitly stated yet or visible, will be part of the US-India trade deal, is likely to be part of the EU trade deal as well. Okay, that India becoming the China +1, the +1 supplier for rare earths. Okay, so that is again part of a evolving theme, which is global supply chain transformation. So again, if you see, lot of things, like the other big thing which was coming was the sunrise sectors. The focus was put on biopharma, biotech, right? Biosimilars. Then there is focus on data centers, not only for Indian consumption, but data centers for rest of the world, right? So we gave a huge tax break up till 2047 to that. So which is very clearly indicating that there is some kind of a deal happening. Probably we'll see in the US-India trade deal that there is that we will be buying or there will be FDI in data centers, maybe with joint venture with local companies, and for that technology will be brought in. That technology will be part of the trade deal, right? India's commitment to, let's say, $100 billion annually from US. So over 5 years, that becomes $500 billion, which Trump is tweeted. So that's roughly 100. It's not much of a challenge. We are already buying $83 billion of goods and services from US. So moving from that to an average of 100 over next 5 years, annual average of 100 is not a challenge, especially when we need equipment in data centers. We need equipment in nuclear. The reason for nuclear, again, the whole economy is growing at such a fast pace. You need power to power that economy, and we will need clean technology for that, renewable technologies for that, and nuclear. And nuclear is the SMR, which is still to be proven, but the small modular reactor, that is required for the data centers if you want large scale energy. So these are some of the technologies which are being brought in, probably from US and from the European countries as well. So, but you can kind of parse the budget and start putting two and two together, that what is going on with the US trade deal or some details of the EU deal. So this is the forward-looking things are, biopharma, AI, data centers, clean technology, nuclear technology, rare earth processing. So these are some of the areas where we need to focus on, and where we will see lot of investments and lot of activity, and maybe in 3-4 years time lot of production. Okay, because all these things will take time in terms of getting activated, but during that time the capex of the whole thing is going to happen. So you can start seeing all of these things as an integrated thing rather than isolated bits and pieces, that okay, this is a EU deal, this is a US deal, this is this year's budget. No, it is part of a very large integrated vision where India becomes a very, very important and critical keystone species of the global economic ecosystem. Okay.
Absolutely.
I've already mentioned some of the sectors, but I would like to point out from an investment point of view, the most important, all of this gets financed by the financing sector, the capital markets and banking. And so the focus should be on capital markets and banking. And fortunately for investors, these sectors are, especially banking, is available at extremely low valuations. It's mind-bogglingly low valuations. It's unlikely to happen again in the near future, exactly at the point when the balance sheets are the cleanest in decades, NPAs are the lowest in decades, and growth is forward-looking growth. It's already double-digit nearly, but forward-looking growth is probably mid-teens. So under those circumstances, to be able to get PSU banks at below 10 PE and to get private sector banks below 20 PE, that's just mind-boggling opportunity.
All right, Dr. Gupta. So you have very nicely given your view on this. So separating policy excitement from investable clarity feels critical right now. So I would sum up your analysis in three Hindi for Hindi audience also. कि अल्पकालीन उतार चढ़ाव धैर्य की परीक्षा लेता है, दीर्घकालीन स्पष्टता अनुशासन की लेता है. हर बजट उत्साह पैदा करता है, लेकिन कुछ बजट ही वास्तविक फाउंडेशन बनाते हैं. तो निवेश जो है एक जल्दी होने से पैसा नहीं गंवाते. निवेशक जो है जल्दी होने से पैसा नहीं गंवाते, बल्कि गलत होने से गंवाते हैं. So that's what Dr. Gupta has always maintained. Thank you so much, sir, for being here, and we'll come back to you again with our questions. So now moving to the next guest speaker, we have with us Mr. M. Srinivasa Reddy from IceMake. He is recently appointed CEO of IceMake Limited, and his theme for today's discussion is whole chain, agri-infra and execution opportunities. Ms. Reddy, let us know what is the focus on execution on the ground. So three key areas that you have to touch upon is whole chain, fisheries and agriculture infrastructure opportunities, execution challenges and readiness, and sustainability and energy efficiency. So I have two questions for you again. How significant is the opportunity created by Budget 2026 for your sector and this thing for cold chain and agri infrastructure? Second is what execution gaps still exist on the ground? And third is how important are energy efficiency and sustainability in scaling infrastructure? Yeah, Ms. Reddy, over to you, sir.
Greetings to all the fellow panelists. I think the budget is nicely summed up by each of the senior colleagues on the call. I would just take slightly a minute to explain the context of the budget. I think to read the budget context in the backdrop of serious supply chain disruptions, several issues related to geopolitical scenarios and tariff unpredictability, and most importantly, the multipolar world that we are now witnessing. You have to see the budget in that context. I think, given these challenges in the global scenario, I think the finance minister has done a wonderful job of balancing the budget. If I have to just say that the budget, through the budget, I think the finance minister has kind of laid out a foundation, I would say that way, to take India into a self-reliant route, to gain the self-reliance in many of the sectors that she spoke about. I think this budget has attracted a lot of focus and attention on the sunrise sectors, essentially the electronics, artificial intelligence, semiconductors, renewable energy, defense, and pharma. Coming to your specific question of how the cold chain related sectors that's been given prominence in the budget, I would relate one to the farmer sector. The finance minister announced setting up about 10,000 crores of outlay to promote biopharma clusters and biopharma sector. This will give rise to a lot of opportunities for the cold chain requirements in the. So, India is doing pretty well in terms of pharma growth, pharma R&D. We've been contributing, India has been contributing to the global pharma landscape in a much significant way. I think that's a strength probably the finance minister want to consolidate itself further. So the announcement that has come is, I think, is a boon for the pharma industry in general. So we do, I mean, a refrigeration company like us does a lot of work in the pharma sector by way of a cold chain refrigeration products and solutions. So that will give rise to demand for the refrigeration products and solutions in the pharma sector. Second sector she has announced is support for the fisheries. In India, I think we've said it in many forums that India is an agrarian-led economy, in the sense that India depends on agriculture. Per se, 60 to 70% of our population depends on the agriculture-related economy. That said, of course, the country has strengthened its position in the agri sector and the horticulture sector for long. Over the decades of experience, the country has put through that hard work. Today we are in a position to proudly say that we are the largest producer of milk. We are the second largest producer of the horticulture, fruits and vegetables, and also we are the largest producer of meat, and also we are the largest producer of the cattle as well. So that said, the challenges are there plenty on the supply chain, especially related to value chain. The government estimates that the losses on the agri supply chain is a tune of about 25 to 30%. If I have to just convert into a numbers, it is whopping $10 billion. So the key question is, how do we arrest the wastage along the supply chain, all the value chain? Even if you're able to control 10% of this wastage, it will amount to a significant add-on to the GDP in general, apart from the saving on the natural resources and the many other resources that go into making the agricultural products. So cold chain is an enabler to ensure the refrigeration solutions are deployed to contain the wastages. So these are the two sectors which has gained prominence in the budget typically. But India still has a long way to go to structurally change the agriculture pattern, because in the country we have a issue related to holdings. Our holdings are very small. Aggregation is a challenge. So obviously, to for someone to make a good business case in the agri industry, you require a lot of consolidation. So that sense of consolidation, agriculture, and then the aggregation is a challenge that still we continue to grapple with. But that said, the country has been making a significant progress in terms of the cold chain adoption. So, though we are lagging behind the global peers, even in Thailand, China, Philippines, and small countries like this, the adoption of a refrigeration and the cold chain is in the order of 60 to 70%. So, the country is still about 10% adoption level. And if you can bring this adoption to about another 10 to 15% more, we will be able to contain the wastage reduction across the value chain and contribute to the GDP effectively. So that's the first question that I would like to answer. And second thing is, in terms of the challenges, I said it's a more of a structural challenges. I don't think that the government can do anything related to, except the more agri reforms are required. But I think the government probably may look at this idea of doing agri reforms going forward.
All right, sir. All right. Thank you so much, Mr. Reddy. So, what you're saying is the country is moving on a right path, and cold chain, especially, is clearly moving from a support function to core economic infrastructure. So, I would come back to you with another question, but let me take few questions from the audience also. So if anybody wants to ask any question, please go ahead. Ashwini ji, if you have any question, you can sort of unmute and no question from Ashwini ji. Okay. So I would have another question for you, sir. What is the today's biggest execution bottleneck you see in your sector? Financing, energy, or project readiness?
You're asking me?
Yeah, I'm asking you, sir.
Okay, so there is absolutely no dearth of a capital in the country. The capital is available. The
Okay.
key question is the making cold chain viable. Let me give you with a small example. Suppose if we have to set up, say, 5,000 tons of cold storage, obviously the capital is something that one need not worry, but the question is the viability. The financing part for that. So unless structurally we have a back-to-back infrastructure developed, connecting from the farm to the fork, the standalone investments is not going to help the either an agriculture value chain or the industry in general. I think if I were to just slightly explain, decode this wastage along the value chain of a 35%, roughly about 15% wastage happens at the post-harvesting stage. I'm saying at the farm gate stage. Roughly about another 10% happens during a transportation. Then the balance, another 5 to 7% happens in the last mile distribution. So the challenge is not limited to one particular touch point on the value chain. Challenge is everywhere. So it is extremely important for agri sector or any investor to look at the end-to-end value chain from the investments and the infrastructure point of view. That's one point. Secondly, in India, what happens in the agriculture value chain, um, the commodity changes hands quite frequently, in the sense the farmer does not take the product to the market himself or herself. There are intermediaries who take the product to the market. So the product changes hands at every stage. So therefore, there is no single point accountability for the entire commodity, right from a harvesting till to the consumption point. So this is not true in case of, say, developed countries like US, Europe, where the holding is not an issue, aggregation is not an issue. A farmer himself, who's a big enough to aggregate the products and then build a cold chain or refrigeration chain to take the product from the farm to the fork or gate consumption point. So this is one challenge, which is essentially in India structural in nature, and of course, government is trying to do with the help of retail interventions. The long ask has been to allow the FDI in multi-brand retail, but that is still, pending. See what happens. See, you need the pull effect. The pull effect comes from the markets. Suppose if the players who are in the retail sector are able to create that pull effect and connect the backward linkages up to the farm gate, then this problem gets solved out. And third question you asked, I think, which I on a sustainability and energy efficiency. Cold chain, generally the sector is energy guzzling sector. It takes a lot of energy, obviously. And in terms of the refrigerant standpoint, country, I think all the players in the country and country has made rapid progress in acclimatizing and advancing the technologies related to global warming, so and so forth. Secondly, all the products that are manufactured here are compliant with energy efficiency norms. So I think we can proudly say that our systems and products and solution services, which are definitely can be benchmarked globally with the global energy efficiency standards and also in the sustainability norms. So we are not lagging behind that because country has done well in terms of adopting those technologies in the refrigeration side.
Absolutely, Mr. Reddy. You rightly pointed out that India needs to save $10 million are being vested. That would translate into more than like crore rupees, I suppose. So there is a lot of the government and the players like Ice Maker has to put in their efforts to sort of help the country and through this cold chain infrastructure, storage, and all that for farmers and everybody. Thank you so much, Ms. Reddy. So before I move to Dr. Gupta with the question, I have a question for Professor Sunder Ramji, and that is which regulatory area matters most for investors' confidence, sir, over the next, let's say, 18 to 24 months?
Okay, I think it will be the equity markets because, as you know, bank deposits are taking a beating. Now we talk about return, not interest. Very subtle change of mindset. We don't talk about interest, we talk about returns. Even the EPFO is investing in the equity because otherwise they are not able to give sufficient returns to the investors. So I think it's the capital markets where one thing is you have for persons resident outside India, PROI, some tinkering has taken place and some switches have been opened. Okay, that is one thing. Second thing is with this trade deal, you will see the floodgates opening into the Indian capital markets because the growth is here. So foreign capital which had been exiting India will come here. You will get both FDI as well as FPI. So SEBI is very, very keenly monitoring and micro monitoring the situation, and they have a consultative style of regulation. So SEBI consults the market participants, goes back to the drawing board, and they are aligning their policies to the expectations of the market. So I think you'll see a lot of action in the capital markets to streamline the operations. You have insurance companies and pension funds also who are big investors in the capital market. So you'll see a lot of capital market reforms. And as I already mentioned in my prior entry into the discussion, is that banking has undergone a sea change. It's not even plastic money now; it's electronic money, CBDC, etc. So banking regulation will also take place. We have all sorts of banks, for example, payment banks, small finance banks, large banks, universal banks. A lot of foreign banks have shown an interest in getting a toehold in India. You already saw SMBC. You saw some banks taking a stake in Shriram. Now a new investor has taken a stake in Aditya Birla Capital. So this is where the yields are. So you see a lot of now banking and capital markets are not going to be two separate silos. So to answer your question, finally, I will say you will see a lot of upgrading and streamlining there. As far as banking technology is concerned, India actually has something to show to the other world, like an ISRO or a DRDO. So we have got to lead the way. So you will see a lot of sandbox regulation also, where a new innovation is permitted in a limited way, and based on the experience, the formal regulation and licenses are issued. You'll see more of that.
Absolutely, Dr. Korivi. That's a nice way to put, that investors must look at these
Yeah.
signals
Yeah,
very nicely.
just to
Before
add one
moving,
point,
yeah,
Prime Minister Modi has a vision to make India the fintech capital of the world. Finance plus technology. We have the wherewithal, we have the capability.
absolutely, sir. And even VRIGHT exchange is founded on those lines only to connect the world, world capital to Indian markets, all right, through digitally, and with just like this, like we did in with the payments gateways and UPI and all that, where you can just make payments in just a second. Similarly, people all over the world or any from anywhere, companies can make meetings on digitally on this platform. That is the kind of robustness that we are focused on. Anyways, moving to the question that I have with Mr. Ajay Thakur. Dr. Gupta, I'll come back to you. I have a question for you also. But Ajay sir is there or he's there? Okay. So Ajay sir, I have a question related to SMEs. What is the one capability SMEs must have to strengthen and to attract institutional investors? So that is one area that SMEs, as of now lack. So if you can elaborate
See,
on
for
this.
for any company to grow, in a sustainable manner, it's very necessary that they should manage their cash flow efficiently, and they always remain cash flow positive. That is the one requirement. Second, they should not be stuck a lot on inventory. Okay, they have to manage their receivables, and they need to ensure that their working capital should not get prolonged. Okay, and because most of the times I found that SMEs are struggling for money, and especially in unforeseen circumstances, or if there is some disruption, then their balance sheet turns red. I think there they need to work, with their heart, balancing their heart and mind, focus on their cash flow, always keep on looking for business FNU in different countries, different places. Uh, Try to find the opportunity. That is the second thing. Third thing is that they should invest on people, and also on technology. On technology also, I have seen their investments to be very less. On people also, they invest very less. Now these are the opportunity cost. If they are not going to remain invested, or if they don't invest in these two assets, they can't remain long in their business. So I think these things they need to ensure. And the fourth thing is compliance. They should keep their books transparent. They should have a good board. They should have compliance officer who should do all the compliances on timely basis. That is very important, because nowadays government has digitized everything. So if you keep any loophole, you may be penalized heavily. So government is not liberal on all those things. And let me tell you, ignorance of law is not an excuse in law. So, at that point of time, nobody will see your intention, nobody will see your unawareness about the laws. They will just come to you heavily. So, I think on these matters, the assembly need to work in a big way. They should ensure that their business keep on going year on year. They should be investing on the manpower and on technology, and they should look for business opportunities. I think these things are very important. If they imbibe all these things, I think they should keep on progressing. Many of the
Absolutely.
many of the times I found SME just saying that was I am SME, I am SME, I am SME. It's not a big thing. If you are today micro enterprise, then try to grow to become a small. If you are a small, then you should try to grow and become medium. And if you are medium, then try to grow and become large. So this should be the process. There should be a process of evolution. You can't remain, stuck in a range. If you remain stuck in the range, then you'll be out from the business. Okay, survival of the fittest is very necessary, and then you need to ensure that you are always fit so that you can survive. So that is very important, and all the entrepreneurs, all the businessmen should keep all these things in mind.
Absolutely, Mr. Thakur. I'm sure that companies are today much more aware, and they should absolutely focus on building trust. They should adopt technology, and they should also have transparency and, of course, compliance and all that. Thank you so much, Mr. Thakur, for your discussion. And now moving to, if anybody has any question, I can take it, or I move to Dr. Gupta with the last question of the day, and then we can close. Any question from anyone? No one. So I would just I have one clarifying question to Dr. Gupta. Sir, where should investor remain patient despite short-term noise? Dr. Gupta.
See, it's actually very simple. If a company was unlisted, the only thing people would focus on was the evolution of the balance sheet year on year. Whether the net worth is increasing, whether debt is within the range, safe range, whether revenues are higher than the previous year. And in case of little bit of cyclicality, you would look at the 5-year rolling kind of revenue growth, right? Revenues, profits, cash flows. Are all of these things or most of these things increasing every year? And as long as that was increasing and volume of business was increasing, people would be satisfied with the performance of their investment. As soon as it is listed, somehow our focus is completely on the stock price. Okay, and most people say, oh, I bought it at 100 rupees, now it's looking like 80 rupees, so I have a 20% loss. It doesn't make sense. If you paid 100 rupees for something which you calculated based on the conservative future cash flows as worth, let's say, 200 or 150 rupees, and you paid 100 rupees, and it's now trading at 80 rupees, it's absolutely another chance to grab even more of the company if you have the capital. If you don't have the capital, have the patience that it is at least allowing you. If it was unlisted, you couldn't exit the company. At a 20% discount from when you entered, you have liquidity option. So the capital market is giving me two advantages. One, if I have more capital, I can buy it cheaper, right? Second, if I don't have and I need to exit and get some liquidity at a haircut of whatever it is, 10, 20, 30%, I can still exit and get my capital back, the portion which I need, which I can get. So these are the things which has to be viewed. Rather, most people get psychologically destroyed saying I invested 100 and it's looking like 70 or 80 and I have a 20% loss, and which the person doesn't need money today. So nobody is forcing him to sell off, and he just has to wait for the typical bear market lasts anywhere between 6 months to 1.5 years, sometimes 2 years. Okay, that's typically the range. In rare cases, let's say 10% of the cases, it lasts for 3 years to get the same number back in the headline numbers I'm talking about. Let's say Nifty to Nifty or Sensex, whatever it was, earlier peak, it goes down and comes back. So it's a matter of, and which is why people say that you should be having 3 to 5 years of investment horizon when coming to capital markets. So you should actually always be prepared that the day I invest, markets will go down and remain down for next 3 years, and that doesn't matter to me. If you understand this, and that eventually Mr. Market will be forced to price things correctly. In the short run, it deviates. Sometimes it's extremely overvalued compared to the value of a company. Sometimes it's extremely undervalued. But eventually, over a 3-5 year period, typically it goes back in line with the intrinsic value of the company. And if you have made a conservative estimate of intrinsic value and you have bought it at significant discount to that, and you have a portfolio rather than one or two stocks. You need 20-25 stocks in your portfolio, which you are consistently watching from different sectors and industries. And if that is the case, and you understand this 3-year, 5-year patience requirement, and you understand that I should look at the fundamentals, it will be very easy to have the patience to hold through this.
Absolutely, Dr. Gupta. So very nicely, you can hear us, right? Okay.
Yes, absolutely.
So budgets may be annual, but investment decisions are
One
always.
thing, Aryan, just a minute before
Yes, sir.
before you conclude. Now the domestic companies must understand that slowly it will be a level playing field with the foreign companies. Okay, because the deals that are being entered between different companies, where tariff barriers are being removed. We just want to know from some people that the deals that has taken place with United States tariffs have been removed from our country also. So from that point of view, from that side, when the companies will be entering or dumping the products in our company, then domestic company is going to feel the pressure. Same way with the European companies. When we entered the trade, we have seen, four-wheelers companies, sale prices started falling. So with the time, the competition will be much more with the international players also. And domestic companies need to be on their toes. So I think that will be another disruption that the Indian companies have to keep in their mind.
Absolutely, Mr. Thakur. You're absolutely right. So policy creates possibility and capital decides outcome. So thank you so much. Let me now close the session. Uh, Today's discussion has helped us clearly understand the direction and intent of the Union Budget 2026. At the same time, it has highlighted that themes such as policy execution, global capital flows, asset allocation, and sector level reality deserve deeper and more structured engagement. As a natural extension of today's conclave, BRIGHT Exchange will be hosting a leadership dialogue series focused in depth conversations with select policymakers, economists, investors, CEOs, and fund managers, including some of our distinguished speakers here today. These dialogues are designed for serious investors seeking clarity, context, and continuity beyond events and beyond headlines. I would like to thank our esteemed speakers for their thoughtful insights and perspectives. Union Budget 2026 is not merely a statement of expenditure. It is a signal for India's long-term economic intent, where infrastructure-led growth, strategic manufacturing, digital capacity, and capital market deepening converge. For investors, this message is clear. Policy visibility has improved. Execution is the next frontier. And disciplined capital allocation will define outcomes. At BRIGHT Exchange, our mission is to enable structured, verified, and meaningful investor dialogue. And today's conclave is an important step in that journey. Thank you for joining us. We look forward to continuing this dialogue on the BRIGHT Exchange platform. Thank you so much, everyone. Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank you.